Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. And as you can see, we're coming to you live and we're at AICPA Council. I'm with Barry Melanson, Lisa Simpson, and we'll be introducing the other presenters shortly. So it's great to be with you, Barry. Great to be with you, Lisa.
Thanks, Eric.
It's great to be with you.
Yeah, I think many know what AICPA Council is, but let's just, for a few of the listeners who do not know, let's give them a little bit of background on what is AICPA Council, Barry.
Yeah, AICPA Council is a governing body of the AICPA that is really a collection of different members from different states, and the number from each state is based on the size of the states. Each state has two, and then on top of that, it's sort of a portion based on the number of CPAs in that state. And it comes together to provide input on our strategies and oversight of some of our activities and updates on some of the major trends in the profession. And it's also a way for us to get fantastic feedback from every corner of the country.
Yeah, Barry, it's kind of like the AICPA Town Hall meetings. Town Hall, we get tremendous feedback, and we got a lot of feedback over the past couple of days here at Council. Why don't we just kind of, at a high level, talk about some of the major themes that were discussed?
Well, I will do that, but since you mentioned feedback, I want to make this point because I really want the Town Hall audience, which is fantastic, and we're really proud of the interaction we have with all of you. One of the questions I did get, though, at Council was what do we do with all that feedback, and how do we utilize it, et cetera. And the feedback and the questions, our team goes through it. We portion it out inside the organization to either the right committees or the right staff functions, depending on what it is. And so it is very valuable. Anytime you can get that richer feedback, it is something that is useful in an organization like ours. So thank you all for that. The themes in Council really were, some of the major issues that are facing the profession. Clearly, technology was one. We had a presentation. You and I are going to talk a little bit about that on AI with a presentation from the Gartner Group, which is the leading technology think tank for business really in the world. We had a panel discussion that Lisa was part of that was on business model transformation, which we've talked a lot about in town halls in the past. We talked about advocacy, a Washington update and a state update tied into those, and we'll give you some input from that. We obviously had some discussion and a lot of discussion and breakouts on the talent topic for the profession and really for the world. Talent is a big issue. And then tax specifically, and Melanie is going to cover that with you as well today. So the 5 major themes we're going to cut for pretty much in this meeting.
That's almost a nice overview of what our agenda is for today. So let's just bring the agenda slide up. So this is what we will be covering. We're going to kick things off with discussing a little bit more in more detail some of the council topics. Then we'll be doing a DC and profession update. We're going to share with you a survey that we put out related to IRS service levels. That will be done by Melanie. And then we're going to provide you some of the state legislative trends from Marta. Lisa will then do a technical update section, and she's also going to share some of her business model presentation that she gave at Council. But before we get into that portion, we always bring you announcements. I've already seen a lot of comments coming in from the town hall community, so some have seen this announcement, Barry. You announced yesterday, and I'll move to that slide, about your retirement at the end of the year. I know we're going to be reflecting about this at Engage, and we'll set up a town hall session for you to really think about all that's occurred over your incredible 30-year career. But clearly, we got to bring this breaking news to the town hall community.
Yeah, well, thank you, Eric. Yeah, I did announce to Council. The board and I have been targeting the end of this calendar year, so the end of 2024 for a long time, and we've done it right from a succession perspective. There will be a national search that will be conducted, but we announced it, and it's certainly bittersweet. I love this profession. I love that word passion that's on that slide. I have a great passion for the profession and for every one of our members, and and what we do for society. So it was hard. It was a hard day for me, to be honest, because it's just been a fantastic role and fantastic experience to represent the profession. And I would just say there can't be a better job in this country than the opportunity to represent the men and women who are in our profession, because collectively, the men and women in our profession are just incredible. And I think when you think about our profession, what we do for business and what we do for society, and in these emerging and evolving and complex times, our profession's role is critical. And so being able to be part of that is a real treat and honor.
Well, Barry, I think everybody, I see the comments coming in. Your passion that you bring every day to leading the organization, leading the profession, is unmatched. So we look forward to discussing this in further with you, just all the different things that you've experienced over the past, a few decades. So thank you. And we're going to get on with the many topics of
the topics of the day.
Topics of the day.
Always worried about tomorrow, and as I said in there,
Yes,
I wake up
yes.
every morning worrying about the profession and thinking about the profession. And by the way, I'll continue to do that forever, I believe. But let's hit it.
And I think we might have you back in 2025 as well. All right. So with that, we're gonna move to a topic that was covered today. This was a session that I led with Tom Hood, and we had a keynoter from Gartner provide some really good insights on where Gen AI was currently at. And what you're looking at here is the Gartner hype cycle. I think we're all rather familiar with this. And what you can see is that Gen AI, generative AI, is at the peak of inflated expectations. The question is, how much longer will it stay there? I mean, after the peak of inflated expectations in the Gartner hype cycle, you move into this trough of disillusionment, and then you move up to the plateau of productivity. Why is it, at the peak? Well, take a look at this. By 2027, spending on AI software will grow to close to $300 billion. Today, we saw NVIDIA's financial results were released last night. They grew threefold from last year. Their data center, one thing about NVIDIA, they make the chips, but they're also running these data centers that everyone's using to drive ChatGPT and these other types of large language model capabilities. And it's quite outstanding what's happening in the marketplace. One thing we talked a lot about, though, in this presentation was where things are at from an understanding standpoint. A lot of this presentation was actually focused on the CFO office, finance professionals. And what you see here, and this is a survey that Gartner did to the finance professionals, that there's an education gap. No surprise. This capability has just come out. 90% of employees are looking for more Gen AI training and education. So let me just pause there. Barry, comments?
Well, one of the things that was really interesting that Gartner said was that, yes, this data is focused on the sort of the corporate side, the finance side of all different size organizations. But in the presentation, they talked about the important role that they thought firms would have in addressing some of these issues, some of the issues that the one you see on the slide about the gap from an education perspective. But another big theme, and I think it's right in the sweet spot of our profession, is that the productivity, you talk about getting into the plateau of productivity, really is centered around data integrity and also compliance with regulations that's going to govern AI. And both of those things fall right into, I think, the relationship between a CPA firm and their client, particularly entrepreneurial businesses. Data integrity, we all understand the complexities of data integrity in every organization we have. That is a tough task. And that will be a key component from an AI perspective. And one other one that I really was focused on too, there was a data point, and it's not on this slide, but it said that a very significant number of people have a fear about AI taking their jobs. But the very next data point in the survey work was, but people would become disillusioned if they were not working for a company that embraced AI.
Yeah.
And so it
Yeah.
was sort of the dichotomies of that. People are fearful from it, but they really want to work for a company that's embracing it, which I think is a really important message for firms as well.
And the other thing that we talked about, we had tabletop discussions, and council gave feedback, and we can share some of this feedback at a future town hall meeting on use cases that they were seeing. One thing that is clear is that this is going to produce an incredible opportunity for the firms or for financial professionals. And just like the cloud moved, helped create the client accounting services area, what we're beginning to see is that Gen AI is really going to accelerate the role of the advisor, the trust advisor. Because what these technology companies are doing is they're putting a layer on top of the FP&A solution, the general ledger solution, the tax solution, and it's going to help the advisors be better advisors. And one thing that we do know is that the clients want someone else to run the machine. So it's going to be the firms leveraging AI, as we've discussed in previous town halls, that are really going to drive success. And it's going to drive employee satisfaction.
Definitely on the employee satisfaction, but again, back to the relationship between firms, or if you're a CFO, what you do from a CFO perspective. One of the key points of this was, right now we're in sort of this heightened, expectation notion, and everybody's just inundated with people selling them notions of what can be done with AI, and some of that is very costly. And you saw the numbers on the cost side, and the Gartner wording was sort of like, there needs to be a process that sort of just slows down a little bit and really thinks about what it is the strategy of what you're trying to accomplish in this. And I think, again, the trusted advisor role, if you just think about, slow down and think about the strategy, that's the perfect sort of language of our trusted advisor role in the profession, to talk to an entrepreneur and say, yes, this is important and this is critical, but let's think about it in a better way than just sort of doing everything that's coming across the door and probably wasting resources on.
Yeah, well said, Barry. We have one more slide here. This is what's happening from a legislative standpoint. And I've been told that the 2024 numbers are already out of date, that the 400 bills proposed by state legislators is like at 500 now. So a lot of discussions in the nation's capital and in the state houses.
Yeah, that is true. And as again, a couple points on this. One is, we talk a lot about Washington, D.C. We will here in a moment, and we know the polarization of Washington, D.C. But the notion of the need to regulate AI is actually a bipartisan issue. People from both sides of the political spectrum, maybe if you want to divide this spectrum into 4 components because of extremes, everybody is just focused on that. And that is sort of reflective in the numbers that you see here. But also the polarization and the inability of Washington to get things done, and the number of bills and legislation that is passed in this Congress is at a record low. The reality is that's what produces the dark purple on here, because the states, just like we've seen states take action, for instance, in the ESG space, the state legislatures say, hold on a minute, we're going to legislate. We're going to legislate because there's sort of a void of activity that actually gets done at the federal level. And so both of those things, that just sort of, it's bipartisan, people are getting stuff done, but that's really happening at the state level because of the void at the federal level.
Well, we're going to move on to talking about some of the other top concerns. And this is an interesting slide, top concerns of finance and accounting teams, because it shares where things stood in 2023 compared to 24. And one thing you take immediately away is that talent is moved on this survey to number 4.
Right. I actually use this slide in my profession update for council. And this is an outside-in perspective that I think it's important for all of us to hear. This is about what finance teams really, and this happens to be a source from the US, but we have similar research on a global basis. And this outside-in perspective is saying, look, we are entering in the finance area of businesses, probably the most transformative or transformation-based period of time that finance functions have gone through because of all of the technologies that have come in the recent years, plus you add what we just discussed, AI in that notion. So yes, a year ago, the number one issue on the corporate side, the finance function, was talent. It's fourth now. And really what's driving the situation today is technology, digital transformation, Gen AI, and then the related need for the broader set of competencies and skills of people who are working in this area. And I think that's quick change is really very reflective of the need for finance functions to transform. And I would say, as we talk about the profession and what firms will be doing in the next couple of years, a big part of that will be how their clients are truly changing their finance functions. And I know people might say, well, that's a big company issue. Yes, it is to some degree, but it's a critical component for small firms and their small business entrepreneurial clients, because some efficiencies and different work can get done. And maybe there's only one accountant, or maybe there's one or two accountants in a client's office along those lines. But the CPA is the relationship with the entrepreneur who's focused on the business model, making widgets, doing services. And our profession's voice about saying, now, hold on, there's a lot of things happening in the world, but your finance function right now needs to evolve and transform as well. And I think we're entering a couple of year period where that's going to be a very significant part.
Yeah, and how you just described it, really all those 5 elements in spring of 2024, they're all interconnected.
Right.
Hybrid, hybrid environment, how do you do that? Digital transformation, competencies, skills related to learning the new technologies. Also, the technologies are going to help you, with your competencies and skills, and actually finding, retaining talent. We see this at Digital CPA. We see this when we talk to a lot of firms that are investing in some of these platforms are having less issues related to the talent equation.
There's clearly a relationship on the competencies and higher expectations, and really the evolution that aligns with attractiveness to talent. There is no question about that. People who are entering the workforce, they want to do things that are exciting. They want to do things that are in leading edge. And that is an important part of the messaging of our profession, and helping to get new people involved in that. And frankly, we're not talking about it today. It's an important part of our initiative to reinvent the audit as well.
So Barry, for the town hall attendees, we're moving from topic to topic. We're giving them a little bit of a flavor of what was covered at council. This is an interesting slide showing from 1964 to 2022 CPA growth. That's on the right-hand side there. From 200,000 in 64 to well over 600,000 today, and then it also charts the GDP growth during that time period.
So many of you have heard me talk about how our profession sort of rides out economic ups and downs. And so we had this prepared. And again, I covered it in the council meeting. The reality is, intuitively, I think all the members of our profession know that when there is an economic downturn, the profession is very late in being impacted on that. And when there's an uptick, it's very early on feeling the uptick. But this chart sort of just proves it. You can see the ups and downs of our economy in blue since 1964, which are pretty severe. And if you look at the sort of the CPA line, it's almost in a straight line. Yeah, there was a little bit of a blip there around 2012, but the reality is that our I think it just tells a wonderful story about how important our profession is to the vitality of the American economy and the free enterprise system. Because when people are going through difficult times, we're extraordinarily needed. And certainly when the opportunities are greater, we're extraordinarily needed. And I really think that's an important message for young people.
Yeah, I mean, it's something for us to further discuss, and it kind of leads into, in some ways, this next slide here on this big effort that's been underway with the National Pipeline Advisory Group.
Right. We've all talked about pipeline in town halls and in other venues, et cetera. And just like in that survey, the talent point sort of moved. There are people moving back. We're seeing some universities with increased enrollments, a lot of increase actually in accounting. But we had something called the National Pipeline Advisory Group that we worked with, that was bringing together people from all different aspects of the profession: academe, regulation, small firms, large firms, obviously from all different parts of the profession. And they've been an incredible group of people who have worked independently and looked on a data and a fact-driven basis. A lot of research, not just on the emotion of what's important, but really what does the data actually show. And we had a detailed report of this in council, which we're not going to go through here, but these are the 6 major themes about how, the sustainability from a human capital perspective. Not anyone is sort of designed here to be a short-term fix, because there's really no single short-term fix. But it includes telling about a compelling story about accounting careers, which I sort of gave one just now, but the notion of really how powerful a career in our profession really is. Making education more engaging, particularly in the early courses. Really, the time and cost of education, and we have some plans to deal with that as well. The growth and support of CPA exam candidates. What CPA exam candidates have told us in that research is, look, first exam is hard. It takes a significant commitment, but I need help. Some of them, I need financial help based on my financial situation, but I need time. I need time to get through that process. Underrepresented groups are a critical part of answering the total footprint going forward. It's been a big initiative. The reality is entrepreneurial capital is owned by broader groups of people, and the profession has to reflect that. And then employees want different experiences. And a lot of what the technology is driving, DAS with the audit process as an example, all these changes that are happening in firms. And firms, I would say, are being very innovative on how do they get the workload down. And we're gonna talk about DC in a minute, and some of that is what tax season looks like.
Well, and if people want to see the full report, they can use this QR code to download it.
That's correct.
So we're going to go to DC. We've got a short DC update today. Always starting off with here's a nice picture of the nation's capital. So Barry, any comments on the current environment? Then you can jump right into something that's top of mind with a lot of the listeners, just the latest on the Wyden-Smith tax bill and Wyden-Crapo tax bill.
Crapo. So the Wyden-Smith bill is the one that we've been talking about, and it relates to the R&E and a little bit on the ERC and bonus depreciation. Melanie's going to address that a little bit later, because we continue to get a lot of questions about what to do with the R&E space. That bill is still out there. It's got a very tiny chance of passage. You can't ever say zero, but she'll give you some thoughts from that standpoint. The Wyden-Crapo bill is really a bill that's being discussed and drafted and things of that nature. But there's 2 points I want to make about it. It really is the forebearer of the discussion on tax for 2025. Highly unlikely that this is going to get any movement in 2024. But we know tax law is going to be a big issue in 2025. We have the expiring tax provisions. We're going to have a new Congress. We're going to have either a reelected, like immediately reelected, or reelected president from 4 years ago. So we're going to have a White House that is going to, in either case, is going to be a lame duck. And so the reality is that 2025 is going to be a very stressful tax legislative period. And what we're seeing is some of our issues here. And the second point I want to make is you see that first bullet under the Wyden Act. And that's something that we have worked with Congress to craft. And it really goes to some of this human capital element. It's how do we make, for instance, extensions, taking one piece at a time, how do we make extensions work seamlessly? And it provides a safe harbor. For most firms and most clients, you could do all the extensions you need to do in January, because you would be able to, finalize what happens, and you could get a safe harbor provision and not have to make these crazy tax calculations right at April 15th, et cetera. There's still other complexity there, and Melanie will talk about that as well, the layering of K-1s and the problems that come even into the October footprint. And on, just so the other points on here, it is a very complex and polarized environment right now. That is not going to get better in the short run. And in fact, if you look at the House of Representatives, even if the House were to flip, it's a very narrow Republican majority now. If it flips, it's probably going to be a very narrow Democratic majority. The Senate, most people who follow this are predicting a pretty good chance of the Republicans gaining control of the Senate, but it'll still be a narrow margin either party. So these are really significant issues. I think when you hear the report from our survey work of our members as it relates to tax season and some of the things that the IRS that has put out that Melanie will cover, the whole notion of tax and workload, I think, is a really important issue that we're going to work really hard to have addressed when tax legislation does move in 2025.
Well, moving from tax to audit discussions in DC.
Yeah, and I realize that most people in this town hall do not do public company audits, but I just wanted to share this because obviously we have hundreds of firms that do public company audits, and it is a very important part of our public interest mission as a profession, and it makes our capital system work and our free enterprise system work. And our firms that are doing work in that area, they're under, heightened expectations, heightened regulatory increases, and it's a very difficult and stressful time for firms in this space. There's a lot of debates on some of these regulatory comments. Erica Williams, who's the chairman of PCAOB, basically, put down a marker saying, yes, there's been a lot of action, and we've only basically saying we've only just begun. And, that is it's an important part of the profession, but it's also a difficult part for firms to work through today. And I think it's important that all of us in the profession recognize that. Absolutely.
Because even the firms that are not involved with public company audits are aware of the environment. So it's something that important for us all to discuss. And hopefully, again, as we've been saying with technology, there's continued investments in the audit platforms, and hopefully that also helps with some of these pressures. We're now going to move to the next segment. Barry, I know you've got another engagement. I just want to let you know that we've got dozens, hundreds of comments coming in here related to your announcement, and we've got over 9,000 people on today's town hall. Our regular listeners are about 30,000. About 30,000 people tune in every couple of sessions. I know this is something that you're going to continue to discuss as this year plays out, and you'll be at Engage and you'll be at a future town hall. But thank you, and I just want to thank kind of repeat the many comments that we're having coming in here. A lot of thanks for the leadership that you've provided.
Well, I'm humbled by all those responses, and thank you very much. And I'm on a bunch of town halls before the end of the year, and
right.
So we're going to have time to discuss all of that. And now you're going to hear from Eric. You're part of our great team as well, but 3 other people that are on our team that are fantastic in each of their disciplines. And I want the listeners to know we have an incredible team of people that are incredibly passionate about our profession as well and their subject matters. And you see a lot of them in the town halls, but even more than the people you see, they're supported by talented and passionate people as well.
Thanks, Barry. Well, Lisa.
Thank you. May I have the clicker, please?
Yes.
I love getting the clicker. All right. Thank you, everybody. And we're going to have a conversation with Melanie Lauritsen, our VP of Tax Advocacy, who is becoming a regular face on Town Hall, which I'm happy about. And we're going to talk about some of the things she talked with counsel about around IRS service and strategy. So welcome, Melanie.
Thank you for having me back.
And I think we're going to start with the survey around IRS filing for the filing season,
Yes.
and how our members are feeling about it. So you got an eye chart here. Why don't you tell us what that one means?
Okay, so last time that I was here, I recapped what the IRS's view was on how they did during this filing season. Now, when you look at this, yes, the IRS did improve from last year, which was also an improvement from the prior year. However, to really understand the progress of the IRS and where they're at, you have to look at the whole history behind it. So in 2015, AICPA did a big initiative and passed a resolution in order for the IRS to get modernized. In 2016, which was the rock bottom, Congress gave the IRS some additional money to start improving and answering their phones. So looking at this chart, you see that improvement through 2019. But then, of course, COVID came along and derailed everything. And you see the brunt of COVID impacting in 2022. And that's where we hit a dissatisfaction of 74% and only 7% satisfaction. So my point is, when you take a look at these slides or these numbers, it's that, yes, the IRS has made an improvement. However, we're not to pre-COVID or pre-pandemic levels. And so there's still a lot of room to go.
So Melanie, I apologize if you could just speak up a little bit more.
Sure.
So that we could make sure that our audience captures all your great insights.
Great.
And just to clarify really quickly, these are from our members who's responded to the survey, right?
Yes.
So this is our members telling us how their tax season went.
Yes,
Okay.
absolutely.
All right. Great. Just to clarify there.
And
Go
I
ahead.
should also add, our member survey tells a different story from what the IRS's survey comes forward. Now, our survey results always have a tendency to line up with the National Taxpayer Advocates report to Congress at the end of the year, which recaps how IRS did. So the responses, the feedback we get from our members really does show us the reality of what's happening with IRS.
Got it. So speaking of the reality, I know the practitioner priority hotline
Yes.
is so important to our members and our audience. So how did the activity go on the hotline this year?
Okay. So as you recall, I reported that the IRS did an 88% level of service. Now, the reality from what our members are providing us and feeding back, it's only 56% of our members were actually able to get through to the IRS on a consistent basis. That left 29% of our members really was a hit or miss, and 15% of our members weren't able to even get through to the IRS. Now, wait times did improve, and only 28% of our members had to wait over an hour, which is a tremendous improvement from 2 years ago of 63%. So yes, there's improvement, still not great. But our biggest pain point that really comes down to is, even if the IRS picks up the phone, are they giving you the answers? Is there a resolution to what you're calling about? And anybody in tax knows, if you're calling the IRS, it is not because you want to know, where do I put a charitable deduction on a tax return? You're calling because the IRS is really the only one who can provide you an answer. So the information here, 37% of our members were able to get a resolution. 37% of our members were not able to get resolution.
I know in the last town hall, I was looking through the Q&A and the feedback, and that was a very common piece
Yeah.
of feedback that we were getting.
Pain point.
Yes, they answered the phone, but no, they did not answer
Correct.
my question. So
Correct.
these survey results certainly agree
Yes.
with that. All right. The infamous courtesy disconnect has resurfaced. So explain really quickly what courtesy disconnect is, and then what our members experienced.
Experiences. So I think the IRS would love to have the slide never exist and that courtesy disconnects don't exist. So what it is for those of you in tax probably experience this, when you call the IRS, you wait for 2 hours, and then the IRS does you the courtesy of hanging up on you, so you don't have to wait anymore. And this just perpetuates more people having to call the IRS and having to start all over again. So it is a real problem. Based on our member feedback, 60% of our members experienced the courtesy disconnect. Now, the courtesy disconnect can either happen at the beginning of a call, but it can also happen when you get transferred, which makes it extremely painful, because you could hypothetically be on hold for almost 2 hours. Somebody does pick up the phone, then you get transferred to try to get that resolution. You could be on hold 2 hours and they could hang up on you.
So the purple block on the pie
Yes.
chart there is 60%?
60%.
Wow.
Yes.
Okay.
And it's not an improvement. It's the same number from last year.
Oh, goodness. All right. That's going to be a gut punch.
Yes.
Okay. So I've actually had a little bit of personal experience with this question, because I had to do some correspondence with the IRS. And I will say that I'm in that big category of 81%. But you asked the question about how long does it take for the IRS to provide a substantive response?
Right. So sadly, this is the area that the IRS has shown the least amount of improvement. Also, based on member feedback, this is also the area that, if the IRS could improve, would have the biggest impact to our practices. So yes, that 81 was in 2022, which is horrific, but there has been improvement. But 63% of our members are still struggling to get any sort of acknowledgement and correspondence from the IRS in less time than 90 days. And the biggest frustration point that I'm hearing too from our members with the correspondence is we're held to tight deadlines. When we need to respond to notices, we need to respond in 30, 45 days. And yet, who's holding the IRS accountable? And they're taking their sweet time asking for extensions. And sometimes that statute of limitation needs to get extended. So that's really painful for our members.
Goodness. All right. And then looking into the future, what are our top concerns for next filing season?
Okay, so no surprise here. The impact of legislative changes is number one, especially as we go into an election year. We heard Barry talk about all the changes that are going to be coming, and it will definitely be a big tax year for us. What did surprise me is that only 17% of our members said that the lack of guidance and clarity from the IRS was an issue for them. I actually expect that number to shoot and pop up once legislation gets settled and the IRS has to start providing that guidance. What isn't on this list is when we did the survey, we also had an option for other, and people could fill in what they felt that other was. And it came back with 5%, and overwhelmingly, it was the delay of the brokerage statements and also those K1s, the final K1s with it, which was what Barry was talking about. It really creates this workload compression for our members. It makes it extremely difficult, even to do an extension, kind of guessing with this stuff. But anyhow, the point is we were working on these issues prior to COVID, but then when COVID came along, kind of derailed this and put this on the back burner. But now is the time to start moving forward with regards to the brokerage statements and the K1s to help our membership.
And getting that legislation
Yes.
passed that we're in favor of.
Yes.
All right. So overall impressions, what's the summary of the feedback from our members?
So you can read those pain points because I think almost every person in tax can relate to those pain points. But the big takeaway from this is that, yes, the IRS has shown improvement. We appreciate that improvement. It is the trend in the right direction. However, it's a long ways to go to get for our members to get the resolution, the service that they need from the IRS. So we have our work cut out for us. And it should be noted that all these survey responses, we actually provide that feedback to the IRS. We directly tell the commissioner what is happening and what we're seeing on our front.
I love that. All right. We can't have a town hall without talking about BOI.
Right. Okay. So on this slide, you guys see, the background history, who needs to file and when. We've already discussed some of those recommendations that we have. We've discussed the court case that's out there, and you can see the recommendations. The 30 days is really difficult to comply with, and really it should be done on a yearly basis. That's what our structure is set up for, and that's really what it should be in order for entities to be able to comply. Of course, we also ask for suspension of both the reporting and enforcement for BOI. Now, what we're also finding separately is a lot of our members are having some hesitation, and this is an opportunity to provide a service. But the interesting part is FinCEN actually reached out to me this week, and they are interested because they finally became aware that our members can be hesitant in this area, and they want to clear the road for our members to be able to provide the service. They're finding that it's not just CPAs, but it also is the lawyers. And they also want to ensure that carriers are providing coverage for this type of work. So they want to get together, they want to have those conversations to be able to clear the way for this and just help our members be more comfortable in this area.
And I know so many CPAs that I talk to are saying that their small business clients, attorneys don't want to get involved.
Absolutely
So,
not.
Yeah. And I think we're set up. We just need some of those tweaks to the filing deadlines to really be able to provide this valuable service.
And it really is a combination of if FinCEN could do their piece and then we have the legislative piece.
Right.
Once we have the two together, it really will make it just an add-on for the services that we already provide to
great.
entities.
All right. Thank you, Melanie. And I know we'll keep having these conversations. It is now my pleasure to introduce our VP of State Regulatory Affairs. Apologies in advance if I didn't get all that right. But Marta is presenting on her first AICPA Town Hall, even though she's been with us for several years. And she is going to talk about state legislative trends. And I'll give you the honored clicker.
Thank you, Lisa, and it's good to be here today. And I think Barry said this really well at council this week. He said the CPA profession is a local, national, and global profession. And I think that local piece really ties into what we are seeing in the states and where it really intersects with what all of our members do. So today, I just wanted to give you all a recap of what we've seen around state houses, the trends we're seeing that are impacting the profession, and what we should be aware of as we head into a November election year in the states and what that may set up for the future for the profession. So right now we do have 15 states that remain in session, but the majority of jurisdictions have come to a close, and it's been a very hectic year in the states. One of the main issues we have seen that many of you may be familiar with is the taxation of professional services. This issue really came about in 2010, if we can go all the way back to 2010, where legislators were looking to raise taxes and revenue for states through personal services such as haircuts, pet care, lawn care. And legislators very quickly realized that taxing those kinds of personal services was not going to gain a lot of money. So legislators really looked at a whole slew of wide variety of professional services they can begin taxing. And that is how we got the taxation of professional services. That includes our CPA services. We, in 2024, you see it in front of you, there were several states that were looking at how to exactly do this and which professional services to levy the tax on. The 3 states that we were actively watching at the AICPA were Illinois, Louisiana, and Nebraska, with Nebraska really giving us a case study of a new governor, a popular governor, who looked to roll back property taxes by at least 40%. And so to backfill that property tax cut, he looked to the taxation of professional services. Through the great advocacy work of the society in Nebraska, we were able to, with other stakeholders, beat back the legislation and educate on why it is not smart tax policy to tax CPA services. But this is an issue that has bipartisan support, obviously for different reasons. Conservatives around the country and states look to either eliminate certain taxes or to get rid of taxes or to cut taxes outright. And so that is what we're seeing in the more conservative leaning states, in the more progressive states. A lot of lawmakers are looking at how to really create that equity in the tax base and if businesses are paying their fair share. And so that is why we see it in some of the more progressive states. This is an issue that will continue to happen moving forward, especially as states look to nearby states as competition. And what I mean by that is if my state next door is cutting personal income taxes or corporate income taxes, should my state do the same? And if we do that, then how do we gain money back to our state? And that is through professional services. And that is something to be aware of as legislators and governors especially are looking to cut income or corporate taxes. The next issue, and I know none of you are surprised by this issue, is of course artificial intelligence. We saw, as Eric mentioned earlier, over 500 bills in this space across all jurisdictions. Some of the issues that we're seeing is, of course, states grappling with what is that governance framework? How do we regulate this? Where do we even begin with on generative AI? And I think a lot of what we're seeing is study bills. Studying around the issue, what is generative AI? How do we produce some sort of governance around AI? And so that is where states are sort of trying to figure out their way right now. And one of the things that they're really looking at is what is a responsible and ethical AI framework? And no one really has come up with a great template just yet, although some states have certainly tried. And it is something that we will continue to watch. But I think as states are looking for guidance on this issue, they will look to things like what came out this week from the EU around AI laws. They are looking at NIST, the National Institute of Technology and Standards, and what framework they will put out. And this week, Senate Majority Leader Chuck Schumer has had his staff look into this kind of policy for over a few years now. And so there is a bipartisan group on the Hill looking to produce a roadmap that will protect the workforce, protect consumers from AI. And I think that will create a really good bridge to states and to the government to figure out what the next regulatory steps are in this very nuanced and new area. Another area that we are continuously watching is ESG. Again, more than 500 bills in this space in the state, and the states really landed in two camps on ESG, as you all may imagine. One camp was very pro ESG following the legislation that passed California last year. And then we also have states that are very anti-ESG. And what I mean by anti-ESG is that states are really proposing legislation that prohibits any kind of reporting that is outside of just financial reporting. So states like Missouri this year proposed that kind of legislation. We also saw states like Arkansas do the same. And then we have states like Illinois and New York and Washington who also follow California's lead in proposing very progressive ESG legislation. But the thing I think for states right now is seeing what happens in California with the U.S. Chamber of Commerce bringing a lawsuit against the state, stating that their bill is actually in violation of the First Amendment. So I think states will watch to see what happens there. The other issue we are carefully watching is regulatory reform and the environment, especially as it surrounds the CPA license. And what we mean by that is, where is the state regulatory authority with the boards? There's a whole host of groups out there that are well-funded, well-organized, who think that regulation is a barrier in some way. And unfortunately, when these bills are created, the CPAs are lumped in with a whole host of other occupations. And so we have to educate legislators of what the CPAs do in terms of financial protection of the public, the role they play, the ethics they have to abide by. And so we have to create the space of the differentiation between an occupation and a profession and really make that case of public health, safety, and welfare back to the public. This is an issue that ebbs and flows, but as you can see by the numbers on your screen, this issue really ticked up again for us this year, and we really do anticipate any kind of licensing reform and in the regulatory environment to keep trending upwards for years to come. And so just to kind of give you a key takeaway from these sessions, AI will continue to be a top issue for legislators. I think ESG, California, and how that will shake out will really set the trends and the pathways into states. Licensing, again, will continue to rise to the top as an issue. And as Barry mentioned before, states will continue to move quickly, especially if the federal government does not. States are becoming very impatient. They want to move forward. They want to serve their constituents. And so we will continue to see that, and they will move fast. And of course, this is an election year from both the executive and legislative branch. And I think some of these elections will, to Barry's point, not only further polarize the federal front, but also the state front. And what I mean by that is we are really in a time in the states where polarization is at the highest levels. And I think we are going to see that even more now after some November elections. I believe we have about 11 gubernatorial races coming up in November. We have about 86 chambers and 44 jurisdictions up for some level of election at the state level. And as you can see from this map, and just to give you an idea, divided governments are a good thing in the states, right? We have either a House and a Senate, that's one party, a governor, that's another party. But I think the divided states are really tinkering down year by year. And just to give you sort of an idea of where those numbers add up, in 2008, that divided government number was 26. And now we are to 6. And within that divided government, we actually have 10 states, but the states in yellow are the supermajority states. And what that means is the legislative branch can override the veto of their governor from another party. So those trifecta states and those veto-proof majority states are becoming the norm, and they're becoming more popular. So I think in November, what we are watching is how many of those supermajority states will go even more supermajority, if that's possible. But I think some folks will also want to get rid of supermajorities and see if they can maybe make their way into a more divided government space. And I think for a profession that, to Barry's point, is a national profession, but also a local profession, it is more important than ever that we find a way to work between all of these states on all these issues that we just went through to continue to help the profession and grow the profession. So lots happening in this space. We will continue to monitor it, and it will never be a dull moment in state legislative land.
Thank you, Marta. Appreciate that. All right, let's do a quick technical update, and I'm going to give you an ANA update. So I wanted to make sure that everyone knew that our Auditing Standards Board voted to issue Statement on Standards for Attestation Engagements, or as I prefer to call them, SSAEs, number 23, which is designed to align with all of the other QM standards that have been issued over the past few years. All of this is designed to be in effect for engagements beginning on or after December 15, 2025. The standard differentiates the requirements related to other practitioners who are part of the engagement team and those who are not. We've got a link to a Journal of Accountancy article for you to give you some more information. But at a high level, the reason I added all of these SSAEs there is because I wanted you to see that if you're doing these type of engagements, so attestation standards, AUPs, direct exams, review engagements, this is going to apply to you. So you can tune in to our next ANA Focus webcast on June 12th. And as a reminder, that is free for AICPA members. I've given you the link so that you can make sure that you're registered for that if you haven't already. Like Town Hall, you do get automatically enrolled in the series if you are an AICPA member. So there's the quick technical update, and I'll spend just a couple of minutes at a very high level talking about what I was able to speak with council about this week, which is business model transformation. And if you've been on Town Hall before, this will look familiar to you, but it's about the PCPS project around helping firms transform the way they operate. And this is all designed to help with some of the culture issues within firms that may impact our ability to attract interest in the profession. So the fundamental idea is that if we can create cultures within our firms that are focused on the success of people, that we will in turn raise the success level of that firm and the profession. So we're approaching it from 5 different topic areas, and we've got resources around most of these and building out more to come. So just as a reminder, I want to make sure that you know that those resources are available. What we talked about as well, because talent is such a huge component of any conversation in the profession, is what we call an employer of choice. And this is based on the research that we've done around what people are really looking for. And as I look through this list, which we'll go through in much more detail at a later point, I don't think any of these are out of order or a difficult ask. I think if I were thinking about where I wanted my children to work or my grandchildren, not that they're old enough, this is what I would be looking for them to find in an employer. So I'll just leave this with you to think about. I think this applies to all organizations, not just accounting firms, but maybe some things to think about over the next couple of months, and we'll throw resources into the newsletters and further segments to talk about it. But this is Mental Health Awareness Month, the month of May is. So I wanted to take just a minute to highlight some of the resources that we do have for you around mental health. PCPS team developed these because we feel it's such an important topic in the profession. And I just have to say, I'm so happy to see that we're having much more honest conversations in the profession around the topic, primarily since the pandemic. So if anything good came out of the pandemic, it's that we're now more comfortable talking about the need to focus on mental health. We have resources available to all AICPA members because this is too important not to share. So with that, I know that was a quick update from me, but we had such great content. I just wanted to make sure that we gave Marta and Melanie and Barry ample time to chat with us. So with that, we'll go to open forum.
It's been a power hour, Lisa.
Yep.
So a lot of, the business model transformation activities of PCPS are very impressive. So
Thank you.
that presentation was very well received. I think, Lisa, we got lots of questions that have come in as usual. There was a question, Marta, just to talk a little bit more, clarify on the tax related to professional services. So a little bit of confusion on that. So maybe.
Sure. I think when we look at the tax on professional services issue, a lot of times, as I mentioned, legislators are looking to either eliminate certain taxes and they need to make up that cut in some way in state budgets. And so they look at professional services such as CPAs, attorneys, and others to tax the services that are provided to clients. And so then the clients have to pay the tax on doing their taxes sometimes. And so what we're trying to say is that is not a smart decision. There are ways that to certainly make up state revenue without taxing professional services for CPAs. And for us, the issue is that we do not believe that is also sound tax policy. And we have a whole host of resources and talking points as to why that is. But the biggest takeaway is really that it also doesn't create the revenue that I think many legislators see that it does or think it does. It's also a very great and quick talking point for many new governors who maybe don't know the way to raise some revenues or produce money for other programs. And so professional services seem like a low-hanging fruit. But when you really dig into the ins and outs as to why it's not smart policy, as Nebraska did this past session, legislators and governors quickly figure out that it's not the path forward. But if anyone in the audience has any additional questions, they can certainly reach out to me and I can give them a whole hour as to why this is not a wise decision.
Well, your state update was greatly appreciated, and we definitely have some questions that we'll
Sure.
be getting to you.
Absolutely.
Melanie, you got some additional feedback to add to your IRS survey. So
Okay, I'll take it.
anything else that you want to add, on top of what Barry said about the current legislative environment?
So I think the legislative environment, especially with the Section 174 issue, right? People saw that it flew through the House and people either had the misconception that it was going to become law real quickly or that it was law. And so I think people need to understand legislation can change wildly and it can change from day to day. Just it's forever changing. So people need to understand the current law, keep up to date with the law. And that's the hard challenge of tax, but also the very exciting challenge of tax because it's never boring. But yeah, looking forward, I think there's a lot of our recommendations, particularly up on the table, like Barry mentioned the Wyden-Crapo bill, that its basis is the National Taxpayer Advocate's Purple Book, which is her legislative recommendations, but she footnotes a lot of our recommendations and our positions. So a lot of good things coming forward for us to keep an eye out.
Well, thank you. I think, Lisa, unless you've got a quick question, I think we're almost ready just to move to resources.
Yeah, we can certainly move to resources. And while we're doing that, I'll just respond to some of the questions in the chat about the licensure requirements. So I will encourage you to download the slides, click on that QR code to get to the full report. If you're not able to use the QR code, you can just Google NPAG report, NPAG, and just take a few minutes to read through that. On our next town hall, we'll be discussing that even more. All right, my last ask around this year's PCPS Top Issues Survey, if you could, we've extended the deadline, if you could respond to this by close of business tomorrow, we would really appreciate your insight around what you're identifying as your top practice management challenges if you're in a CPA firm. And we use this feedback to help guide the resources we develop, where we put our priorities, et cetera. So last ask, please do that by the end of the day tomorrow. Thank you.
Thank you, Lisa. So the next time we'll be live again together, Lisa. It's always great to be with you in person. And we'll be doing this at Engage It's at a slightly different time. It should be in your calendar. It's June. It's a different day. So it's Wednesday, June 5th at 2 p.m. And we'll have Sue Coffey, Tom Hood. We'll have our new chair, Carla McCall. So looking forward to doing that at Engage. And also, if you are at Engage, we'd welcome having you come by the CPA Pavilion, CPA.com Pavilion booth at the exhibit hall on Monday. Lisa, I think you're going to be doing selfies with people, right? So we'll have it's always wonderful to see you. We love being with you virtually, but if you are at Engage, find us sometime during the event, and looking forward to a very good Engage and continuing our live town halls there. So thanks all for today. Anything else, Lisa?
Just thank you, and look forward to seeing you either online or at Engage.
Thanks.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.